Trading is all about taking a risk that's based on incomplete data, and becoming an expert at this should lead to profitability. You learn from the mistakes you make, but you make sure the lessons are the right ones. And using historical charts, they can lead us astray because in hindsight, everything is obvious. So how do we avoid thinking that the past is going to equal the future? As James Boswell said, he said, learn from the mistakes that you make, but make sure the lessons are the right ones. Now, looking back on the market in hindsight allows us to see the obvious, but only because we have all the facts at hand as to what happened. Now, reviewing the market like this, it's useful to the extent that you can see how it developed in respect to your various reference points. But if you're trying to achieve the ultimate goal of being consistently profitable, is this what you need to be looking at? Well, my argument is no, it's not, and here's why. When a trader who is either yet to be profitable or is struggling looks at what has happened and why they lost money, they're looking for what they should have done in these specific circumstances. Now, emotion leads the mind to looking at the nice moves and ignoring what did not work. We will find what we seek, and if all we're looking for are the places we would have made money, well, that's exactly what we're going to find. In my experience, and all of us at Netpicks, this leads to a right or wrong type attitude, and it masks the information that's really important to making positive changes to your trading. When you search for what works in this way, you're kind of doing a form of curve fitting, and you're skipping over the places where the same things did not work. And this leads to the tendency for denial when a trade doesn't work, even though it looks almost exactly like the one from yesterday that was a great trade. Remember, you've probably missed those times when in the same period, the trading setup didn't work at all, or at least spent much more time looking at the ones which did work. Then you get the emotional stuff that comes into play, which we all know about. Trades don't work sometimes, regardless of how perfect that setup is. And if you've done your proper testing, you have seen the expectancy of your trading strategy, including how many losses your trading system can take. Denial in trading, in terms of skipping the losing trades and only seeking the winning trades, it's deadly. Looking over historical charts is really important, and I do it just as I'm sure as you do as well. But using it to identify the market's current behavior or to work out why you didn't make money are not always the same thing. So what is the important information? Where you trade it and whether it was according to your plan is a really good start. What your emotional state was at that time. Where your stop should have been set, and if you did take it, did you exit in a timely manner or hold on for too long or too short a time? And what made you do this? Where else might you have taken this trade within or outside of your plan? And what would the result have been? Now, none of these things are about where the best trading opportunities were. We don't know for certain how good a trade will be until it is completed. Historical charts can, and it's going to make your view biased if you're not thinking in this way. So think of historical charts as potential, not probability. And the quote that I mentioned at the beginning is one that I always try to remind myself of, and that is, learn from your mistakes, but make sure that the lessons are the right ones.